Good afternoon, everybody. This is Hunter Mozingo, Associate Portfolio Manager and Research Analyst for Revere, bringing you your daily market insight video here on this Thursday, June the 30th, about 15 minutes after market close, 4:16 p.m. Eastern Time, approximately, as I bring this video to you guys from Jacksonville, Florida. And today was a doozy. Some wild volatility, some extreme moves to the up and the downside. We're going to get into all of that stuff, as well as some of the strongest and worst performing stocks of the day. Additionally, we're going to talk about interest rates, which are at a very, very key level. We're going to take a look also on the S&P 500 at an extremely important spot that I think all of our listeners should be paying very close attention to. Not only is it a big horizontal support and resistance level, but it's also a huge Fibonacci retracement. And myself and Don have talked about it in the past, but I think it's more important now to be watching that level than ever. So let's get right into it. What just happened? Sharp bounce off the lows. We had a nasty move down out of the open and then a nasty rip up not long after. We're going to look at that on the intraday charts here in just a second. Wild volatility to finish out the quarter. So just a really all over the place kind of day. I mean, at one point this morning, when in the first 30 to 35 minutes of trading, the Qs were down 3%. At lunchtime, they were almost positive. So just superb volatility out there in the markets today. So performance-wise, G6 down 1.4, S&P down 0.88, Qs down 1.25, Dow down about 80 basis points, mid-caps down about 1%, Russell 2000 down 0.2%, 60/40 down 0.22, and Grow slightly green on the day, up 0.15, thanks to our short position. So market state and trend gauge have no changes from Don's video on Tuesday. We're still in the same position that we were, that we've broken back down below from that consolidation and just not looking particularly great right now. So market state still correction, trend gauge all still red across the board, as you can see there. So let's go ahead and get right into the tail of the tape. But before I do that, let me just highlight my email here. If you have a question regarding this key level or the Fibonacci retracement we're going to talk about, don't hesitate to email me. If you want to know what Revere does, what our strategy is, you want to talk to somebody and ask some questions, you can always email me. You can call this number 855-732-5932, or you can email anybody here, Tim, Don, Dan, or Meryl at revereasset.com, and they'll help you out as well. So we're going to get right into it. We're going to talk tail of the tape here. So what I have over here on the right side of the screen, this is SPY, so the S&P 500 ETF. This is an intraday chart, so 5-minute chart, excuse me, intraday. So you can see here, nasty sell-off in the morning, brutal rip up here from that low, and we kind of just aren't able to really clear this key level that we're going to talk about more in just a second, and then a very volatile kind of nasty close there. So let's get right into it. We're going to work through it, and then we're going to look at the intraday a little bit closer once we get to the action part. So headwinds remain the same. We touched on that. We saw the put call ratio spike up a bit yesterday, back down kind of to the regular range that it's been in today to 0.94. VIX spiked up over 30 this morning, ended up only being up about 1.5% in the 28-ish range. And fear greed back to 23, so now entering the extreme fear category once again after briefly getting out of it. As Don's noted here, 628 failure, 628 bear case in effect. We broke those key moving averages and are still below those key moving averages on the Qs and the S&P, still below the 21, still below the 8, which is also a really important moving average to pay attention to. We're going to look at that too. So some key levels and key moving averages that we're going to talk about here on the S&P and the Qs. News-wise, PCE inflation data slightly better than expected. Chicago PMI 56 versus 58. These didn't really do much to move the markets in the pre-market trading, but this is important data that obviously anything that's related to inflation, the market is very sensitive to at this time. What were we watching today? What could the S&P do versus this support here? And as you can see, S1, we got down below that. We lost 3,800 right out of the gate. Really nasty action. S2, 3730 to 3750. That's kind of where we ended up finding our footing more or less. And then ultimately 3,900 resistance. We did not get there today, but we did run back up into this 3,800, 3,815 level. And that is what we're going to be talking about in detail today. Action wise, here we go. So as you can see, we open up down a little over 1% here on the S&P. We move down sharply over the course of the next 30 minutes, about another 1 or a little over 1% here to 37.39. Then we have a frozen rope up to the upside here, a really sharp 2% rally essentially up to 38.19. Pull back, make another attempt to get over this 380 level here. And now that we're doing this, I'm going to pull up the actual S&P 500 so we can put it in those terms here, since it should be updated now. Okay, so we're going to look at it in terms of the S&P 500 itself. So sharp move down, sharp move back up. And we kind of pause here around this 38.19, 38.17, and ultimately are unable to push definitively through this level, which also corresponds to the close from yesterday. Then we sell off here into the close, sharp move back up, a lot of volatility right here, ultimately, and close below this key 3800 level. So although this morning started off brutal, in just a flash, you were back to almost pressing green on the S&P and the Qs here, but just a really, really volatile day. These are really vertical, sharp moves up and down on the indices. This is more often what you see on a growth stock, but the indices are trading very volatile right now because we are in a bear market. As you can see, low to high 37.39 to 38.19. Notes wise, TNX, which is the 10-year note, broke its 50-day moving average. We're going to talk about that in more detail. Friday, we have the ISM manufacturing performance we went over already. Sector wise, bonds, solar, utilities, real estate, defense, home builders, all up. 9 of the 11 of the major sectors red. XLC, KNY, that's communications technology and discretionary, all down. KBE, that's banks, fertilizers, and natural gas. Portfolio, we went from a negative 0.19 beta to a 0.01 beta. We sold our short position here and took the gain on that this morning. Bottom line, bad end to a bad quarter. Really not any other way to put it. It was a tough quarter for the markets and a lot of volatility for this quarter. Starting in April, it really got nasty. So just a bad end to a bad quarter. That's the bottom line today. As you can see, prior close, 38.19, that's exactly the highs of today, unable to get through that close. And then today's close, 37.85, wild volatility to close out the quarter. So let's talk about this key level on the S&P 500. And you don't have to be a genius or some, incredible market technician to identify this. But what I want to point out here is this 3800 level. Obviously, this is the lows from back on May 20th. This is a huge support level that we have battled all around, and resistance level, as you can see. And why is this so important? Well, the 38.2% retracement from the COVID low to the recent high is 38.15, which also corresponds almost verbatim to the highs of today. So this 3800 to 3815 level, you've got this huge horizontal support level, the lows from May 20th here, as well as that Fibonacci retracement right there corresponding to that level. And that's exactly where we stalled out today. So what I would do is I would set an alert here at the highs of today on the S&P 500. And what you would want to see if you're looking for a move to the upside here is a sustained move above that 38.15 level and a sustained move above today's high. So that would be clearing the 38.15, clearing the 38.20 area and staying above it. And it just so happens that that also corresponds exactly to the 8-day exponential moving average, which I talked about a great deal in my videos. But once you break down and get below that, that 8 EMA can act as a guide lower more often than not. And as you can see, the last 2 days since we've been below it, it essentially has been rejected right there around that 8 EMA. So the key level to be watching here on the S&P 500 is 3800 to 3815. It's a huge horizontal support level. It's the low from May 20th earlier this year. It's the 38.2% Fibonacci retracement there at 3815, and your 8 EMA is now in that range. So a huge level for the S&P to potentially clear, or an area that might end up shutting it down and acting as resistance. So please keep a close eye on that level right there with the S&P. QQQ, it's going to be kind of a similar story. Ran right up to the 8 EMA today. The big level for the Qs here is this 280 area. As you can see, it actually got over that by $3 or $4 today. But this 280 area is a big spot to reclaim, as well as you could do the same thing here on the Qs, set an alert at the high of the day, and that essentially will equate to possibly getting back over the ADMA and back over that 280 area. But we got down to 275-ish on the Qs today, only about 2% from these recent lows. So the positive, if you're looking at these charts, right, is that we had a nasty move down, but we didn't go all the way back to our recent lows. So the Qs stayed about 2% above. You see IWM here, kind of a similar look to it. Had a nasty move down, but we didn't go all the way back to the lows. So that's the positive if you want to look at it that way. The negative is we're below these key moving averages, back below the 21, back below the ADMA. And again, this is a huge horizontal level for IWM. You want to look back to these lows in May, and that's kind of where we're struggling with right now. So on IWM, it's roughly 169, 170. That's also about the highs from today. MDY here, same story. It's actually weaker. As you can see, RS line continues to angle down for mid caps after this sharp sell-off here. Not really the main laggard in regards to the strength off this bounce phase here. So mid caps a laggard, same story, below the ADMA. Last two closes basically rejected right around where the ADMA is at. And then the Dow here, same story, rejected kind of right around where that 8 EMA is. You can see this one slightly above the May 20th low, and the Dow with a little bit of relative strength hookup here over the course of the last couple of days. But basically the same pattern on all the major indices. First step is get back above that ADMA, get a close above that ADMA, and that equates to getting back above 3,800 on the S&P. So I know that was a good bit of time on the indices there, so we're going to move through the rest of this pretty quick. TNX, the 10-year yield, maybe this was part of the reason we saw the bounce off the lows today, but TNX coming back pretty sharply here, back below this 3% level and back below the 50. Last time it was below the 50, it ended up going on a big rally. We'll see how this time plays out. This 3% level here, very big level to see if that can possibly turn into a support area. And then secondly, the dollar, sorry about that, the dollar here, down a little bit today, but this still looks very constructive. This 28 level is a huge resistance level to clear and get through. Hasn't necessarily been able to do that. So I'd keep a close eye on the recent highs here, 28.07, 28.21 on the dollar. If that continues to move up, we've said it a million times, it's going to make it tough on American equities. So let's get into the charts. We had defense stocks very strong today on the back of some news that European countries would commit to upping their defense budget. So you got names like Raytheon, Northrop Grumman, excuse me, Lockheed Martin, all having pretty solid days today, all up around 2-3% or so. So, and all relatively okay looking charts here too. NOC looking the best, probably of the bunch, but big time relative strength for these names today. Additionally, maybe the best looking space in the market is the medical space, and that means anywhere from like biotech to managed care to diversified, like Lilly here. There's a lot of strength in this medical area. So Lilly, one of the strongest looking stocks in the market. The RS line is essentially moving up at a 90-degree angle here. Vertex, another stock that is extremely strong that we've been talking about, hanging in here around above the ADMA. Nice relative strength again today. Another name that's acted very well, UTHR, United Therapeutics. I know I've touched on a few of these in the last week or so, but look at how these have held up relative to the market, and 99% of the rest of the stocks out there over the course of the last 3 or 4 days held up very well. And last one here, SGen, another gap up name, but look how beautifully this has held its gap up here. Down a little bit today, but nothing wrong with this name. Big time volume on the move, as you can see here in this range. So SGen, Vertex, United Therapeutics, Lilly, all acting well. Some of the better acting growthy names today, LNTH with some nice relative strength, Celsius also showing some relative strength today, up a little bit. And GTLB was up more so into the before the close, but ended up being down a little bit here. But this is still one of the more constructive looking growth charts out there, which is why I kept it on the list here. We also saw American Tower up a little bit today. Nice relative strength climbing on this one, as you can see from the lows back here, been moving up pretty sharply. decent looking setup if this can get back above the 200-day moving average. And then Solar's staging a big comeback after their brutal sell-off, which is very commonplace for them. These names have some nasty whipsaw action, as you can see by looking at this base on end phase. Excuse me, but back above the 21, up about 6% today. Sedge also up 4 or 5% or so today, maybe a little more. But Solar's up a decent bit after their nasty 2-day sell-off there. Moving along to the bad, Bitcoin below 20,000 today, around the 19,000 area, and Ethereum also, excuse me, I'm sorry, Ethereum not acting the best either, as you can see, down about 8% today. These continue to just look atrocious, for lack of a better term. These charts are brutal on these cryptocurrencies. Oils also continuing their demise. Had a decent little rally up into the ADMA and have gotten shut down in a really nasty way. XOP down 4%, XLE down about 2.5%, if I'm not mistaken, or closer to 2. So these are, again, coming close to their recent lows. XLE just a little bit off of it, XOP even closer. So oil stocks continuing to struggle. We also saw oil itself, crude oil, pull back pretty sharply. Some of the lesser growth names today. So Datadog did not have a good day, down about 3%, even though, again, well off the lows here. DOCN, another one down about 4% or so. Nasty gap down below those key moving averages, as you can see. And Snow down today as well, about 3%. So some growth stocks acting okay, some just going hand in hand with the market not having a good day. Fertilizer stocks not having a good day again. These look like they're ready to potentially continue lower. MOS back below the 200-day. NTR also back below the 200-day. CF, which is the best looking of the bunch, has a nice head and shoulders pattern and looks like it might want to continue to the downside as well, back below the ADMA here today. And lastly, the big laggards for technology today, the big stocks, Amazon down 2.5%, Google also down about 2.5%, and Apple. So some of the big heavyweights having a tough day today, most of them in fact, but these three in particular were laggards pretty much all day long, as you can see, relative to the performance of the indices. So that is it for today's video. Just to recap real quick, that key level on the S&P 500 is 3,800 to 3,815. That corresponds to a major horizontal support and resistance area. It corresponds to the ADMA and the 38.2% Fibonacci retracement from the COVID low to the recent high right there at 3,815. So a huge, huge area to watch. Keep an eye on that area. Set an alert at the high of today, and watch that level closely. So that is going to wrap up today's video, everybody. I hope you enjoyed it. Hope it was valuable. And I'll see you guys on the podcast this weekend. And everybody enjoy their long July of the 4th weekend as well. So thanks everyone for listening.